7/29, 2019. It is Tackle Trading's halftime report. We're here for our live daily stock market show where we kind of just go through our daily routine, talk about all the action in the markets, the news, what's on our mind. We've got Matt, we've got Tim, we got Cody. Matt, how you doing this morning?
Tim, I'm doing much better than the British pound.
Yeah, what's going on with the old pound? Hard Brexit style. I guess Boris Johnson, people are taking him seriously on saying he's going to take us out that way.
Yeah, apparently Boris doesn't have the answers to Brexit either.
No, I don't think any of them do, quite frankly.
I don't think anybody in the world has the answers to Brexit.
Well, I don't know what the short-term answer is. I don't think the long-term problem is what people think. I actually like the pound long-term once they can get out and start renegotiating some of their trade deals. They're not going to not do business with Europe, Matt.
No, of course not. But it's a very volatile situation, and I think at this point, I think everybody's expecting a no-deal Brexit in October at this point. And the British pound is just absolutely taking it on the chin here this morning, Tim. And big shout out to Cody Mackey of Coach of Tackle Trading. He's been all over that pound pair, getting absolutely slaughtered over the last couple of weeks. So hopefully you guys been watching the Forex report.
Yep, I do hope so.
Yeah, what a move. I mean, that's just a beautiful technical chart. Lower pivot low, lower pivot high, sitting on support, breaking down below it on Friday. Carry through today, huge red candlesticks. Yeah, definitely very, very bearish. Now, with the Federal Reserve meeting this week, obviously, we've got the Bank of Japan with some data coming out as well. Got a lot of action in the currency markets. We'll break down all that, all those charts here in just a bit. Let's start with stocks, though, Matt, if we can. Start with the S&P 500. Mixed market. I was looking at the heat map today. Some of the defensive areas of the market, like healthcare, some of them are popping up a little bit. Some of the more aggressive areas in the market are kind of slowing down. But really, I don't expect the stock market to do much until Apple reports earnings and the Fed meets this week. What's your read on stocks?
My read on stocks is very, very similar to yours, Tim. I mean, we just have a tremendous amount of news coming out this week, and it's not just the FOMC. I mean, you got the FOMC starting their two-day meeting on Tuesday and Wednesday. Obviously, it's going to be a very important meeting with the expectation of a 0.25% interest rate decrease. Are they going to go to 0.5%? What are they going to announce for the back half of 2019? I think we're going to see about a 25 basis point cut at the FOMC this week. I think they're going to see a reduction of their stimulus, which is supposed to end in September. They'll probably do that a little sooner, just to show a little dovish tendency there. And I think they'll indicate another 0.25% cut coming into somewhere into September or October of this year as well. So I don't think the market's going to get their 0.5% this week, but I think they're going to get it throughout the rest of the year here, T. But you also have the BOJ, the Bank of Japan, also announcing on Tuesday monetary policy. And then you have the Bank of London coming in on Thursday morning and announcing monetary policy as well. So you have three major central banks, three of the top four central banks in the world reporting policy this week. And it's going to be very, very choppy in the currency market. U.S. China talking today and this week as well. So they're talking again. More Democratic debates coming in on, I believe, Thursday and Friday, or maybe it's Wednesday and Thursday. I can't remember exactly when those Democratic debates are, but we should see a little bit run to the left as we usually do in primary type debates. And then from an economic perspective, Tim, consumer confidence, manufacturing, and unemployment this week as well. And so it's going to be it's fireworks this week.
It's going to be some fireworks. There's no doubt about it. One of the most important headlines might be that Apple earnings, although I don't know what else we expect. I mean, Apple probably is going to come out and have more volatility than anticipated. They're usually a 3.5% volatility gap, Matt, on Apple Computer. And I'm looking at a bidirectional trade because, quite frankly, I think the market's underpricing that risk. I've traded Apple earnings for 14 years, and they have the same volatility projection all the time. This
4%.
This quarter feels different. It just does. I've seen the reports coming out of companies like this, and they tend to have been gapping a little bit beyond those expectations. These companies that are sensitive to deals with China, international trade, and all that kind of stuff. We'll prep this whole thing tomorrow, but do you think Apple can have as big of a splash as I think, or is it Am
No,
I?
it's Apple. I mean, even though Microsoft's the top company in the world, Microsoft's that old dog. Apple's the shiny new precious metal, and so yeah, it's going to have a big impact. I think it's out of every earnings reports we see in the marketplace, Apple is usually the one that is the most anticipated and the one that really can drive markets either up or down. So that's going to be a very, very important report. But when I was reading on FactSet just last night, Tim. And just to give you a couple numbers so far this year, 77% of companies have beat the expectations, 5.4% better on average against EPS numbers. However, you are going to see negative growth for the second consecutive quarter at negative 2.6. And that to me is pretty damning. But obviously, the market is looking for growth coming out of lowering interest rates starting this week. So it'll be interesting to see how lowering of the rates really do impact the GDP. I just don't believe it's going to have that big of an impact, and I don't believe it's going to have the impact that the market believes. So yeah, I do expect Apple to beat their expectations, just like every company. I mean, 100% of healthcare companies, Tim, 100% have beat the expectations so far this quarter, and that just shows you how far this bar has been lowered coming into second quarter earnings. Apple beats. We'll see what they do on guidance. We'll see how the market responds. But if you're going to play bi-directional, I'd probably do something like a fly, Debicon.
Yeah, I like the debit condor. I actually like the inverted butterfly. You can get a 2.5-point spread, still get about 50 cents credit for the August options. Let's do a full prep on that tomorrow.
Yep, agreed.
I think that'd be a fun way to spend our Tuesday. Looking across other indexes, Matt, the S&P's flat, Dow, NASDAQ, and Russell. Give me a quick look at all of them. Like you'd expect, the Dow's up playing defense. NASDAQ and Russell are just a hair down. But these are all light range candlesticks. I don't see anything really grabbing my attention across the different indexes. What about you?
No, nothing today. I'm not taking anything today. It's a Monday in front of a major news week, major earnings reports, major economics, major central banks. So you're just seeing a little bit of fade action, little hesitation before we start to see price action move. I don't think this market can really start turning. The one thing I'll say is I do not believe this market can really go bullish above 3,000 if the Russell kind of stays pinned down here. Look at the Russell and see how it performs around 1,600 this week. If we hit it, if we hit obviously 1,570 right now.
Summertime, it's obviously been stuck in the mud all year long, but a breakout of any substantial note, one way or the other, could be something. I'm just not seeing it yet. Until it happens.
No,
just
stay bored, cash flow. Yeah.
I agree. Crude light next, Matt, if you will. And, I was trying to rank crude light. And I just personally feel like it's better on the left side of the 50-yard line by 5 yards. But ride the fence whatever way you want. It's pretty neutral, this chart.
Yeah, we call it the coward ranking.
That's right.
That's what we call it. We don't feel like we have an edge anywhere, so we just call it the coward ranking. But I'll tell you what's been a little surprising is after all the news-driven crude oil is basically flatlined for the last week. What's your take on it?
Well, to me, I think about supply, demand, and all the different things that are happening right now. The idea that the demand for global oil is higher, I think that's a bearish argument. Supply is bearish because you're seeing such good, strong U.S. output. I guess you've got hurricane season risk, and you've got political risk, and you've got the risk in Iran. But all these just kind of like news-based risks, I guess, is the only thing that's holding it up. And the general market's kind of holding up. Dollar rallying, crude's kind of decoupled from that, but I got to tell you, I'm slightly bearish. I'm neutral. That's the way I'm playing it. But I actually think a breakdown, quick 5-point down to 51.50, somewhere in there. I think there's opportunity to the downside potentially, but there's also opportunity to the upside. Wherever that tight range breaks, Matt, is tradable in my opinion. And that intraday chart is actually a better chart because it shows that compression.
It does. You got pretty tight ranges between right here at 55.70 and 57. The problem here that I'm seeing on crude from a directional perspective, T, is if you trigger above 57, 57.5 staring right at you, right? And if you trigger underneath 55.70, you have 55 staring right at you. This is going to be a day trading vehicle until we start to see some type of trend on the daily chart. Daily chart really kind of start to form, and that's just going to take some time. It just is. When you see a trend start shift right back coming down, and then it's just in this fade action For this to really start another trend, bullish or bearish, you got to see a break of 55. You got to see a break of 57.70. And then you need to see some price ranges get back up above 60 or back underneath 51. So I see this as a real big neutral range here with some tight consolidation. Good day trading vehicle right now. Good good cash flow vehicle right now. But this is not a swing trading vehicle right now.
You know, quite frankly, the best way to play it probably is aggressive theta through futures options. Now, I like spreads, not naked, but that's a personal take on that. I think if you go out using the 30, even the 50-day options out there, and the next one would work too. And you could probably get quite a bit of cushion on both sides and put on a credit spread. ROI numbers are going to be a little bit better than what you normally see in equity options because of the way they do leverage, but you still can have structured risk. Now, I know that's an advanced product for advanced traders, but if you're out there and you are a trader, it's like, okay, how do I play this crude oil? Futures options, probably an approach that I think is maybe the best approach right now, personally, Matt.
I agree 100%, right? It's bull put spreads, it's bear call spreads, it's nothing naked. You take the risk out of the equation with doing it in a spread. I think that's the one way to play it. You got covered calls on USO. That's another way to play it. Boomerang trade on USO with the naked put to covered call. That's another way to play it. Day trading another way, but I would stay away from swing trading.
You know, let's keep moving through the commodity space here, and give me gold and then silver real quick on the metals markets. I still like gold here. In fact, it's riding, it's holding. I know it doesn't have a lot of carry through on that little doji candle, but it's up today just a hair. And I'm seeing a market that's holding its trend in a very aggressive trend, Matt. It went parabolic in May, right? And then it just has failed to have any kind of substantial pullback. It's a messy short-term chart, in my opinion, because it's hard to trade when you have all these different fake outs that are happening on the intraday. I mean, you had a little breakout there on Thursday that came back, and then a breakdown that came back. And so it's more of a position trader for me. I'm still bullish. What's your read on gold?
Gap up on the Sunday on the Sunday futures open here.
Yeah.
And a gap up above the intraday channel right here of 1430. What I really like here is it retraced back down, held that 1430. Now you got a pretty clear trigger above 1435 in my opinion. So I do like what I'm seeing on the intraday here on the gap up. And Tim, just again, you know, gold going up, gapping out on a day when the dollar's perhaps breaking out, and that's what's so impressive about that gold chart, T, is in that same time frame that the dollars went from 96 all the way up to approaching that 52-week high at 98.30. You're seeing gold coming back here, and you're seeing gold in that exact same time frame, Tim, show tremendous strength and then play a ton of defense up here to the top end of the range. So, you know, gold's playing defense, and it's showing you what it should, T. If the Fed's going to lower 0.25%, if they're not going to care about the balance sheet, if the United States government's not going to care about the debt ceiling, and if the Fed's going to lose their mind, and if China's going to lose their mind, and if Europe's going to lose their mind, and Japan's going to lose their mind, and every central bank around the world is going to lose their mind from a currency perspective, here's this shiny precious metal that just keeps on chugging along. So you got to love the fact that it played defense. You got to love the fact that it broke up above that intraday pivot. And I'm bullish here above 1430 on the intraday and on from a swing trading perspective. Taking a look very quickly at the other precious metal, the one that we love to own here, you're seeing a little bit of a high base type situation start to form with short-term consolidation. I can't see the right-hand side of my chart. With short-term consolidation right here at 1635T, upper end of the channel right there about 16. We'll go on the tick at 1668. You drop this down into the intraday, you see really strong level of intraday support right here in that range, T. Love it when it hits it. Can't break it. That's an easy place to put a stop loss under if you're looking for any type of buy signal right here today.
Yeah, and by the way, Noah brings up a good example in the chat where you don't have to play the futures or the direct metals if you don't choose to. There are other ways to play it, including products like Nougat or GDX or those other ones, SLV, the ETF. Nougat is a really good looking chart. I actually think it's a decent boomerang setup if you're willing to own here. Now I know it's aggressive trend, comes down to being willing.
I just don't like, especially new traders, trading triple leveraged ETF products.
You don't need gas on the fire.
I don't need gas on that fire. No.
Yeah.
And so like, I just don't, especially when they come to the market here and it's a triple leveraged and then they come play options on it. I mean, you're basically playing a futures contract at that point with that type of leverage.
Correct. Yeah, Uber leveraged, no doubt about it. 3X is with options. I mean, you've got leverage on leverage at that point. GLD, I still like the leap options here, Matt. They're dirt cheap on a way to play it. SLV, it's tough to want to go leaps here when the price is priced to perfection. But for SLV, I actually like it more physically than I do for the paper products. Just in general.
GDX looks pretty good right here if you're looking to play gold, though.
Yeah.
I mean, if you're looking at that nugget trade you were just talking about, very similar in terms of the price action that you're seeing on GDX. When you're looking at gold here, kind of choppy, tough triggers there. When you're looking at SLV, forming a little bit of a high base, maybe a flag base pattern. But when you're looking at GDX right now, T, you're seeing a little bit of a consistent flag base pattern coming down into that 9 EMA. I'm going to look for this to consolidate. And then if you drop it down to the 30-minute chart, see a little bit of a trigger here above 2760 on that intraday chart. But if I'm playing anything this week from a gold perspective, and I'm just looking at the chart, right? I'm not day trading, the futures or anything like that. I'm just looking at the chart. I'd have to say GDX chart kind of stands out.
Yeah, I do like it as well. Give me the dollar real quick. I know we've talked about it a bunch, but let's just kind of hit all of the highlights here. You've got resistance. You've got a long-term chart that has been meandering higher. You have an inverted head and shoulders that now is approaching this. On an interest rate cut, Matt, interest rates dropping should not be strong for currency, but I guess the rest of the globe's currency systems are all so dovish right now. Can the dollar break and run?
Can the dollar break on a cut and them not caring about the balance sheet with an expectation of another cut coming in 3 months from now? Yeah. I mean, relative. I mean, when you're talking the currency relative to the other currencies, let's see what the Bank of Japan does.
It's still the ugliest, or the least ugly of the bunch is what it is.
Yeah, the Bank of Japan has a negative interest rate right now. So, I mean, that's going to be interesting. What's the British going to do, especially with the pound falling so sharply?
Yeah.
Are they going to try to support it? So, I mean, there's other things that could impact my point is there's other things that the other banks could do to really kind of impact, the dollar's value even more than maybe the FOMC can do here. But if you break out of this level, if you look at this weekly chart, I mean, the daily chart on the dollar is just absolutely choppy and ugly. But if you drop that down into a weekly chart, you're seeing a little bit of a breakout here at about 98.35. Keep an eye on 98.35 under the dollar this week. If you break out of that range, there's not a lot of technicals until you get to pairing.
No, it's not, which is crazy, but that's where we are in.
Well, and in that environment, T, gold still can rally. In that environment, silver still can rally, and that's amazing.
I saw two headlines today. One, Janet Yellen urging a 25.
Oh God, I saw the same.
And the other one, Donald Trump.
I wanted to throw up.
Don Trump urging for a small little bitty rate cut. They're all modern monetary theorists on the right and the left these days, Matt.
Well, I'm old enough to remember Donald Trump tweeting in 2011 about the insanity of them printing so much money, and now as president, he wants them to print a little bit more money.
Yeah. Kick a little inflation back up and make my house worth a little bit more, I guess, Matt. Just got to ride the wave, ride the lightning. That's the way the market is these days. Bitcoin, talk about riding the lightning. It's not doing much. It struck. It came back down. The weekly chart's probably still messy and choppy, but you go to the daily chart, it's almost infuriating. Try to read that pattern on the daily.
At least you can get a read on the weekly, though.
Yeah.
I mean, this is a bullish retracement on the weekly. That's what it is, right? Call it what it is. That's a bullish retracement on the weekly. Very, very choppy, no doubt about that. But that's a bullish retracement, and you have very, very solid level of support right here at 9,000 on that bullish retracement as well. Short range candle, nothing really to see here until we start reclaiming that 10,000. But I could see people taking a stab above 10,000 here on that weekly chart. Absolutely.
Yeah.
On the daily chart, a lot more choppy, a lot more ugly.
If it breaks below these support locations, there's not a lot of support.
If it breaks 9,000, what do you think? 7,500?
I think it's going to test 7K. I personally think it probably will test 7K this year. How it plays defense after that is going to be very telling.
If it tests 7K, I'm going to call it. I'll tell you right now, I'll call 5,000.
Yeah.
I'll call it right now. If it tests 7, it's going to test 5.
Crypto markets. More obviously as we go here, it is a doji here today. It's amazing how Bitcoin, you can have, what is it, a 2, 3, 4% day, and that is the lightest day it's had in days. So we're slowing down. But I mean, compared to Beyond
Its
Meat,
range is still 8% today.
Oh, I know.
I mean,
it's wild.
It's not Beyond Meat. It's not that.
No, it is not. Down 17%.
BYND, right?
Yeah.
Yeah. It's not that. Man, this Beyond Meat, this company is hard to understand. It really is. It's hard to understand the fundamentals. It's hard to understand the volatility. It's just a tough tradable instrument.
I have a theory on this stock, and I think the algorithms and the dark pools have all gotten a hold of it, and they literally have now propelled it up to the top 5. It's not in the top 5 trading volume just because people are interested in the vegan meat movement. I'm telling you that. It's not just because it's a fascinating company. It's only a $14 billion stock, and it trades as much as Apple and Amazon, Matt, in terms of price times volume. That's insane to me.
Earnings. When do the report tonight?
29A. So tonight after the bell, it is going to be in the headlines, and we will analyze it tomorrow.
Well, it's got a price expectation of, what would that be, 15% price movement?
Which is underpriced, probably.
Which is probably underpriced.
Yeah.
How do you play that with the volatility approaching these levels? You can't buy that.
I think Debicon is the only thing I would even start to want to try.
Maybe a fly.
Maybe a fly. Yeah.
Maybe a fly.
Something where there's a spread, limited risk. You can get the bi-directional movement on the earnings. Yeah.
I'm not going to play it.
No,
it's crazy. It's craziness.
Volatility is too high. I mean, volatility pricing adds a risk here at 120% implied volatility.
Look at that.
200% on the 4-day option.
Look at that on the 4-day option. 200% volatility. Wow. You don't see that very often.
Okay, Sarah. All right.
They're making you pay big time money to get into that position, though.
Yep, I agree. And we're going to talk more stocks here. I don't want to punt on this for too long, but we're going to do our rapid fire section. And what I want to do next, though, Matt, if you're out there watching our show, first of all, welcome out Monday morning. Good to have everybody back in here during our halftime report. Matt, we're going to do the sector roundup where we go through all the different sectors and give a reading. Right now, defense on a daily basis is looking a little bit better, but it's only 1 day's data. Give me an overall view of what's happening with the sectors, all the different Excels, so on and so forth. And while you get that loaded up, I also will ask for a subscribe and a like on our YouTube channel. And I'm going to take a quick peek here. We got 66 people watching live, guys. We only got 19 thumbs up. I want to get that up to at least 50% or higher. Give me a quick thumbs up, click that button, and click on subscribe and the bell. Maddie, run me through the sectors, if you will.
Yes. First and foremost, we always rank our sectors in the Tackle newsletter on a weekly basis for the pro members community. Make sure they're all ready to rock and roll about what happened last week, getting everybody prepared for the week that is coming up. And Marquise Johnson has taken over that role. And ever since Cody started doing the Forex report, Marquise is starting to do a wonderful report. Really appreciating the time he's putting into that. So great job, Marquise. A couple things here. First and foremost, we always rank the score. We always rank all the sectors based on a scoreboard. In the neutrality is 40 to 40. The further we get to the left, the more bearish. The further we get to the right, more bullish. And we always start by ranking the S&P, and then we kind of compare it against the S&P from a are you overperforming, underperforming type situation. The S&P, we did rank, give it a little 5-point bump coming into that positive 15 territory, very similar to where technology and staples are as well. And then you can see the other ones that we are simply underperforming a little bit. And the only sector that got downgraded, kind of what we did with crude, was the energy space. Outside of healthcare and energy, almost everything to the right-hand side of the bullish, slightly bullish to the bullish area. Let's take a look at the charts here very quickly. First and foremost, I'm going to go through the aggressive sectors first. There are 6 of them. Basic materials got to maintain their rating. Tried to break out last week. That's a good breakout. I still like this breakout here on materials, Tim. Materials earnings have been the worst earnings of the bunch, though, and they're still beating like by 70%, but they're still the worst of the bunch. So it is underperforming the broader market, but I like what I'm seeing on the intraday support levels increasing, 20-day moving average increasing, 9 EMA average increasing. And if you just kind of come in here real time, right, you can see a little bit of an intraday resistance level right there start to forming in what I would consider a flag-based pattern here from a bullish side. The breakout certainly didn't continue, but I like what I'm seeing here. Anything above 50, give 59 would be confirmation on a flag-based basic material pattern, which would help the likes of GDX and Nugget and some of those other charts we were looking at. Energy, the twin sister of the basic materials sector, is certainly not performing very well, and you might see a confirmation of a bearish breakdown here today. You do have support right here at about 62. A close underneath 62 would be confirmation, T, and I would slide that energy space from 45 negative probably into negative 35 if we do get that confirmation on the breakdown. We don't have it yet. It's got to close, but if this does, that's going to be continue to be the worst performing sector, in my opinion.
For
go ahead.
Seconds, because with energy, I got to tell you, and I hate to cut you off because I love the thinking here, and I just want to reiterate it. Matt, when I was going through the individual energy stocks, all of the ones, there's a lot of bearish setups actually.
Yeah.
You know?
Well, I'd say there's nothing from the bull side.
Yeah, for sure. And so this breakdown does not surprise me. I would quickly move into tradable.
Absolutely, 100%. You do have, what is it, Exxon reporting this week, Chevron reporting this week, and those two are really, really big reports coming into the energy space. So keep an eye on how the energy space responds around those two reports coming out later this week. But it closed under 62. I would move that entire sector into the negative territory from a scoreboard perspective. That did get a downgrade this week. It would be downgraded more with the breakdown. Communications, your Facebooks, your Googles, your Netflixes, your Disneys of the world, your Twitter. Twitter's on fire lately. I like Twitter. And this space just broke out, gap up on Friday off of positive news, off this bullish retracement, confirming back up later on, probably midweek last week, gap up above, retest that breakout channel. Communication showing a little bit of internal weakness today, but as long as that stays above 51, by key to get it up there about 51.20, I still take that as a nice little solid breakout, and it should have some good trades in that space. And communications did get upgraded coming into the positive 25 territory. Industrial here, T. Industrial, we kept it the same, right at 30. Very similar to what I was seeing in the basic materials. Tried to break out, fade back, kiss off the 9, slow its momentum. Doji fest, needs to confirm back up, but industrial space could have some trades out there with something above the 78.50 level on the industrial space. Technology got an upgrade coming into the positive 15 territory because it is just an absolute juggernaut. Loves the 9, kissed the 9 today. Tim, this was down 1% earlier today. It's now down nothing. And you have perhaps a breakout forming on a high base type scenario in a very consistent bullish uptrend. Any close above 82.78 would be confirmation for me, and you should see some prices fly to the top side if we do see that breakout. Now, obviously, the disclaimer is we have just an absolute ton of reports this week, ton of economic news this week, ton of central bank news this week, a lot of variables. But if you're removing those variables from the equation and you're simply focusing on the price action here, T, you got to love the bullish uptrend, you got to love the higher high, and you got to love the defense at 82, and you got to love the high base here. So technology was an easy one to rank in the positive 15 territory.
And by the way, real quick on tech, I mean, it's kind of a mixed market inside tech. Semiconductors like Intel, Texas Instruments, Broadcom, they're all up big, very, very green.
Applied materials.
But then software companies are down and Facebook's down. So it is mixed, but I love the defense on that 9 EMA.
Yeah, that defense in 82 and at the 9 EMA is really, really strong. And internally, if we were to break down that intraday chart, that's pretty strong bullish V-shaped recovery on the day from yesterday's futures open too.
Yep.
Here on discretionary ranked right at the 20-yard marker, forming a little bit of retracement, trying to get back up above that. This would technically be confirmation, but I would give a secondary confirmation above 123.75. Discretionary staples and technology have been the three sectors this year that you've really wanted to be a part of, and I don't see anything in the discretionary chart or the technology chart that's going to keep me away from that type of call. Love what I'm seeing here, playing defense, on the rising 20-day moving average. 9 a little mixed because we didn't get the price appreciation coming out of last week's confirmation, but keep an eye on 123.75 again on that space. Looking at the defensive sectors, let's go to financial very quickly. Financial got an upgrade to the positive 25 territory, and rightly so. I mean, on the backs of all those earnings reports we saw coming out of the financial space that were pretty good. Finally started seeing breakouts here. Breakout, confirm. Little bit overextended now. If you miss this breakout right here, I probably wouldn't be chasing the dragon at the top end of the range. Let it fade. Let it flag base come back down into the 9. Let it retrace into the 20. Let it set up for a better setup, in my opinion. Upgrade is certainly justified because of what we're seeing in the price, but you are overextended a little bit coming from a price action perspective. I'm going to wait to see if fade action happens. Consumer staples, food-based companies very quickly. Juggernaut year to date, continues to be a juggernaut. Retracement coming into the 20, kiss off the old resistance. Price appreciation doing exactly what it should. Tested above the 60.5 breakout channel. You break out of $60. I would say a close above 60.50 here would be confirmation on a breakout for me, and that does have room to run if it does close above that 60.5 level. So keep an eye on staples this week, guys. Showing a lot of good price action coming into the week. Obviously, a little fade candle here, nothing to be concerned about. Let's see it close above that 60.50 and let that fly. Looking at the real estate sector, real estate XLRE, full of a bunch of REITs. Real estate, we kept at the 30-yard marker here. We still have increasing support levels. We now have decreasing resistance levels. That creates what is known as a symmetrical triangle formation here, T. Outside of the dividend paying, I would stay away from trading in this environment. Dividend paying REITs are really, really good, but outside of that, the price action is very, very choppy. And symmetrical triangles are explosive type technical patterns that they really can drive one way or the other, but it takes time for that to happen. So don't force your will on the real estate sector right now. Let it set up a little better. Symmetrical triangles can fly either way. Utility sector, so showing a little bit of what is the beginning of perhaps maybe a cup and handle formation, maybe a reversal formation. We don't yet know. It would be a cup and handle if this support level stays above that support level. Horizontal resistance, increasing support, that's a cup and handle, ascending triangle, long-term formation. It's going to take weeks for this to set up. Keep getting paid dividends. Don't overreact to anything in the utility space. Keep it ranked right there with real estate at 30-yard marker. And that's what's going to happen when you have intermediate bullish uptrends and then short-term consolidation patterns. You're going to be some degree of bullish, but typically in that 30 to 35 yard marker range. And then the last but certainly not least is the space that has a 100% batting average, and yet their price action is not reflecting what happened with a lot of those healthcare earnings reports so far, because we have lowered that bar so much that it's really kind of everybody gets a participation ribbon in this earnings season, T. Right?
For sure.
Everybody gets the blue ribbon. Okay. So
that's
basically
a good metaphor. I like it.
Yeah, thank you, Cody. So that's basically what's happening in this space, but there's really no trading to see here from that sector.
When you get the participation ribbon and you take it home, doesn't it just remind you of your mediocrity?
I throw it in garbage as I leave the field.
Do you accept a participation trophy? No, of course not. No.
Do you think I'm raising my kids to get participation trophies? Lord Almighty.
Oh goodness. Well, we're going to give Cody.
I'm not the guy that takes the blue ribbon from my 10-year-old daughter and throws it in the trash. No. Okay.
What about the art they draw for you? Like your 10-year-old daughter draws you a nice little picture, brings it to you, says, "Here, Dad, I drew this for you." How long do you keep it?
I have a very strict policy on this until the next time she brings me another one.
Yeah, I'll keep it in my office until I need to clear space, and then it's going in the trash.
Yeah,
and I love my kids. Don't get me wrong.
My wife will have them forever.
Yeah, no.
Me, once I get a new one, I'm discarding the old one.
Correct. I mean, they're disposable, gestures of love, but I can throw it away, right?
Disposable gestures of love.
Oh, all right, guys.
Disposable gestures of love. That's funny.
There you go.
That's really good.
Guys, it's time for rapid fire. What we do here at the end of our show each and every day, and I'm going to talk until we get a chance for everybody to pop their symbols in. If you're here with us live, that's where you want to be so that you can pop your stock in, your symbol, whatever you want us to look at, and then we work through them one at a time in a rapid succession and give you some quick analysis. Let's see what we got coming in here, Matt. A lot of our live halftime crew.
GNRC starting off.
Let's go youngest to oldest here. Cody, Hurricane Play, Generic Holdings.
It's up right now. It's been range up. I'd actually like to see this thing have a solid break above that old high. Otherwise, I'm not touching it.
Dropbox, I'll take the next one.
Very liquid. Yeah, very illiquid on GNRC as well.
I want to short Dropbox just out of my own personal frustration with the product lately. It's DBX on this one. Box as well. Box was actually on our bearish
Box
report.
Good as well.
Oh, we had a little flag pattern on that one. We put it on the report. Dropbox neutral here in the short term. When you violate a pivot, come back and test the 200. You've got some upward characteristics over the last 4 or 5 months, but you got some weakness in the last couple of weeks and a failed pivot on news here today. I'm guessing a downgrade, Matt, but I would only be guessing there. I'd have to look in the news on that one. I see a little increase in price there. So something's going on there. Sherwin,
down 3%. It's big move, down 3% on known. It's got to be news driven.
For sure. SHW from Scott.
Little Sherwin-Williams action here. Love what I'm seeing on this chart from an earnings perspective. Neutral breakaway. This is a runaway gap as you broke out and you started running away from the gap out range, and then you started getting overextended. This is certainly something to get on a watch list, maintain on a watch list based on what we're seeing in the price action. You're chasing the dragon. We know what happens when you chase the dragon. You end up getting burned. So wait for it to come back down to you. You have a screaming 90 EMA moving up, very aggressive 20-day moving average moving up. Look for that to fade back down into the 9 or look for a consolidation breakout here. But I like what I'm seeing on Sherwin.
Costco, Cody.
Costco's been very consistent in the fact that it'll make a little high base or a bull flag, and then it'll break and run 20 bucks.
Yeah,
and then it'll make a high base, and then it'll break and run 20 bucks.
Go watch the options report.
Yeah, if it breaks, the next target, 20 bucks up, is 300. Nice whole number. So look for that break.
Approved by our coaches, and we've got options reports this weekend. I did the report, so go and watch it. It's extra good and extra special, and I want to break the record.
And he still wants a record, everybody.
I do want to break the record. Everybody watch
He's been complaining about this for like 4 weeks now.
3 months. What are you talking about 4 weeks? At least 3 months.
That's true. That's true.
Costco is a beautiful looking.
It's a great report, by the way. I watched the video, Tim. Is fantastic report.
And we've got some volatility stuff on there. So if you're new to Vega, the last 10 minutes will really help you. Yandex next, Matt. Russian technology company.
Hold on. What Tim will not tell you is that he had to record the report twice because something happened to his audio. He was not happy.
Is TechSmith publicly traded? I don't
think TechSmith is, but you would be shorting it.
I would be shorting TechSmith
because
today.
I'll tell you what. Right now, I know how much work you put in that report, T.
Yeah.
And when something goes wrong with the video, it's the worst thing ever in that moment in time.
Yeah. It's literally.
All of us, though, we've all had to re-record a video.
We do so many videos of tackles. Sometimes you forget to hit the right mic.
Either the correct mic or the correct screen. I had an entire one where someone was just staring at my background, and I talked for 20 minutes.
Well, I left the F word in one of the step system videos.
I do remember that. Yeah. And Ilka had to message you.
Ilka, thank you, Ilka.
Yeah, Ilka caught that. He's quality control for us here.
Yeah. Thanks, Mark. Thanks, Noah. Appreciate that.
Yeah. Yandex, YNDX next from Majid, and Chinese internet play here, Matt. Looks like
YNDX. The Yandex used to be on the tackle 25 for a year there. Tim wanted some Russian companies on our list. It only lasted a year. There's nothing to see here though.
What a weird candle though. Crazy earnings candle. I did not see that or traded on Friday, but talk about a $6 range on just a high top tail, high low tail.
20-point range.
Volatility here. Wow, that is something. Verizon, let's keep working through these. Will Saunders out there in Ohio. Good to see your name, Will. And Cody.
Is it me? Or is it Cody?
We'll give it a
No,
go.
I have JP Morgan next.
Yeah. I'll
Take
go.
it, Matt. Yep.
There's nothing to see here. It's bearish retracement, kissing off the 200-day moving average with earnings coming up this week. It would be a short for me if it wasn't for earnings later this week.
JP Morgan.
JP Morgan on the daily chart, look for the break above 17, quickly run to 19 and a quarter. But then if you back out to the weekly, you can see it's going into a zone of a break to its all-time highs.
Yeah.
So if we were to break that entire zone at 1920, 1950-ish, then I would like that even better than the $2 run here.
See, whenever
I could see a quick swing trade there.
I could,
swing
yeah.
trade.
It's an easy swing trade. If it breaks, it'll run up to 19.
Swing trade, run it to 19. If it carries through 19, turn it into a position trade. I could see that.
I still like Goldman Sachs better. ANF,
God, look at the devil. Why would you like the devil more here?
It's got more clear air. So JP Morgan, if it cleared the yearly high, the 3-year high there, I think JP Morgan's got tons of trending in front of it. From just a position trading standpoint, I love the Goldman Sachs earnings. I like the fact that it's got some room up to about 230, 232, somewhere in there.
We're splitting hairs there.
Yeah, I know.
Percentage-wise, you're splitting hairs.
Yeah, I like Goldman a little bit better out of those two. And I like their earnings report. JP Morgan had a good earnings too, but personal choice.
Can Goldman carry through with that trading, though? Their earnings was a lot based on their trading.
Yeah.
That'd be interesting.
Yeah. ANF, Abercrombie, and Fitch, these specialty retail companies were destroyed there for a while, Matt, but you got reversal characteristics here. What's your read? Let's give this one to you.
A quick read here. W formation, breakout to the top, kissing off the rising 20. I do not invest in this space. I don't like even trading this space unless it's on the downside, but I could see a little bit of a flag breakout of 1890. 1890 should price appreciate to 20.
I'm taking 4 in a row. Give me Amazon. Earnings last week were not great. Here this morning, they're carrying through to the downside. I would move it back into a neutral condition, down 2%. Obviously, go check the news, go evaluate fundamentals, but now we're in the middle of that range on a failed trend. Box, I'm just going to say options report. Just go watch the report. We're in a downtrend, flag pattern, beautiful trigger today. Go check the stops, triggers, the whole plan on that one. Got an earnings late August, so it's more of a swing trade setup. KTOS, KTOS. And earnings, it would be instantly vetoed on our scouting report meeting. So I'd have to be looking into Vegas stuff. Intuit, INTU. And go check the report. High base up here at the top. It would be a momentum play riding that 9. Candle down 1% today. So you got to look for confirmation and understand your step system. And in the chat, type in step system module 4. I think the pattern of the week, Matt, was the high base pattern. There are just so many of them in the market because of the market conditions that we're in. And Intuit was no different there. Riding that 9, holding the 9 today.
Hey, question for you. There's a lot of high bases out there. You can play them aggressive or conservative.
I'm going to play them more conservatively. And by the way, if they didn't trigger today, I don't think I will take some of those swing trades tomorrow because of the Fed. And then you're going to be looking at Wednesday. You got to understand your weekly calendar and schedule management. A lot of ways to trade. I'm looking at Vega and Theta this week, Matt, and some of this other stuff to backfill. Matt, I'm giving you 4 in a row. CLF.
CLF post earnings fading back down to the rising 20-day moving average. You're slowing down in this momentum to the downside. Trigger above 11 is where I would look at on Cleveland Cliffs.
TTWO, Take Two Interactive.
TTWO, Take Two Interactive. Very, very consistent. Take Two has been on this 20-day moving average. You do have earnings coming up on the 5th. So that would be, is that Friday?
8-5, I think, is going to be next week.
Monday.
Yeah, Monday.
Monday?
Yep.
Is it Monday? Okay. You may have some time, but with so much Fed and stuff this week, I think you're too tight on that earnings. Very consistent, though. Would have loved the breakout there from last week.
Dollar Tree, Twillo, and Sprint. 3 more for you.
Dollar Tree, M formation, break of that M formation at 107.50. Continuation on that break of that M formation at 105. Price should come down to $100 on that one.
And Mark just popped in the Zoom chat here. Cody, bump him up to a panelist. We'll bring him in. And Twillo, Matt, and Sprint, TWLO.
Twillo here. Twillo earnings coming up really tight on the 31st, so that's this week. Unfortunately, that's a good ascending triangle. Very clean trigger at 150.5. Now, keep an eye on this one with its earnings, though. If you break out of 150, you could be a breakaway gap or a runaway gap. So keep an eye on Twillo here.
Sprint, S.
Sprint earnings coming up very tight. Nothing to see here, and very, very, very choppy.
And 3 or 4 for me as quick as we can go through them. If we missed any, guys, we'll get them tomorrow. Give me IQ and Baba. Couple of Chinese internet company technology plays. There's nothing there for me except maybe bi-directional. I'd look at an earnings build into that earnings coming up. Alibaba, BABA. And I like the trend.
I don't see it above 180 here.
I don't have a problem with a buy above 180. Obviously, a little gappy here because we're talking about one of the biggest international companies from Alibaba standpoint. I like it. I'm interested. I don't have a play on it right now, and I think there might be better plays in the market. But a break above 180 would grab my attention, Matt. No doubt about it.
Yeah.
And if we missed any, c'est la vie. It does happen. Guys, come back on here tomorrow. We got a couple announcements before we're done here, Mark. I'm guessing that's why you're here. Is that right?
Well, and just say good morning and hello and all of that good stuff.
Oh, pleasantries on a Monday morning. Hold on a second.
Wow.
Oh,
Wow.
all right.
Wow. What does
But
he
I
want?
mean it. And I'm not just automatically automating my responses. If you're new to tackle trading, we have an onboarding session tonight, or if you just want to know more about the features or what we offer at Tackle Trading, every Monday night, 8:30 Eastern, go to the shows highlighted right there on cue, go to onboarding. Even if you're not a Tackle Trading member, you can attend that. Coach Frank hosts that, answers questions, does a fabulous job. And we have a new episode of the Trading Justice podcast coming out later today.
Yep. Podcast today, onboarding tonight, but probably the only really thing that we need to pitch, Matt, is the option report from over the weekend. Because, guys, I'm trying to break a record here. All
Reports.
right. Absolutely.
Option report. That's right. Reports. And then just click on that. He doesn't even care if you read it. He doesn't even care if you watch the video. He just wants clicks. He's clickbait nonsense right now.
That's right.
Shameless pandering.
I have no problem with
Clickbait
it.
nonsense. I was out in San Francisco this past weekend for Legacy. And had an opportunity to meet a couple of our hashtag Team Tackle, halftime crew, Thiago and Jimbo. And it was just such a pleasure to meet both of those two in person and, share some stories and hang out. Both of them, I love them both. So it was a pleasure to meet both of you guys.
Teamwork to make the dream work, Matt. Those two guys are two salt of the earth guys. I love those
They're really
two
good guys.
And it's great. Just, when you're traveling, it's a reminder of the actual fact that we got a community here, right? And, and that's one nice thing about traveling.
And Tim, I another shout out to Mika. Mika, another Team Tackle member, brought her son out. And her son is going to be, 18 years old, going to focus on the step system and, really kind of focus on our community at Tackle. And it just, she wanted it for him and she's going to make him go through it. So that was a pleasure as well.
Fantastic. All right, guys. That is our halftime report here on a Monday. And obviously, we got a lot going on over at Tackle Trading. Several calls to action here. The options report, and the options report. And we will make sure we keep pitching
clicks
that.
if I just hit refresh.
I don't think so. I think it's unique.
No, it goes
I'm
up
not
your email.
sure.
So
Yeah,
I can't just do this. I can't just give you clicks.
Yeah. And if you're not a member of our pro community yet, I will tell you this. In the chat underneath our YouTube channel, there's always going to be a 15-day trial sign up and come and join us. The stuff we do on the nightly shows, in the morning traders lounges, our community on the back end. I mean, we are a team here and we're doing some amazing things. Very, very proud of what we're accomplishing here at Tackle Trading. And Matt, the last call to action, if you're a pro member and haven't finished the step system, you better get your butt in the seat and do it. Because we got a mastermind group coming up and only people who finish the course get to attend that. So make sure that you do finish.
And why is that, Tim?
Because people got to follow through.
Because we don't want to answer questions.
That's right.
And waste everybody's time when we should be applying things.
We want it to be advanced. We want it to be for the people who've really dug in and driven themselves through the course and have better questions, that for sure. We want that to be more.
I want to break it. I want to break down intraday timeframes for confirmation and stop loss purposes instead of answering what a 30-minute time frame is.
Yep. It's an 8-hour course, and it's an amazing course. I'm very proud of the work that you did on that, Matt, and that we did as a team. There's no question about it.
Effort.
But guys, go finish the course. It's a part of your pro membership, and it will really help you understand how to build your trades directionally. Great job, Matt. Great job, Mark. And thank you for the pleasantries, Mark. Made my morning. There's no doubt about it. Let's go podcast, boys. We got work to do. We'll see everybody else out there tomorrow in our halftime report.